Welcome to Phil's Gang, and welcome to the free lesson, introduction lesson. It's amazing. Stocks, people make investing more difficult than it is. We used to, at one time, have to hire a advisor or broker because we didn't understand what companies did. We didn't understand what it meant, return on assets, or return on equity of a company, or profit margins, or operating margins. We needed somebody to take and explain it to us and manage our money for us. And those days are gone. It doesn't matter anymore what a company does. With today's technology, and after the 70s when they did the deregulation, everything changed. It's all about following the money. The companies buy the stock first, the brokerage houses buy the stock first, then they flip it to you. Think about it. Every time they sell you a stock, if that stock is so good, why are they selling it to you? They buy it first, and that is the problem. Deregulation killed this industry. It used to be we would find a company, your broker, your planner, who you're paying $150, $200 every time they bought you a stock, but he really worked for you. And he'd find those undervalued companies where management screwed it up. Stock would drop from 100 down to 50. He'd identify those companies. Then when 5 years would go by, they'd rebuild that company, and the value would come back. You'd make a lot of money. And he got paid very well, $150 every time he sold you a share. But he worked for you. When discount brokerage came in, that's gone. Nobody works for you anymore. There's no fiduciary relationship anymore. His loyalty is to the company and to himself and to the shareholders of the company. There is no fiduciary between you and your planner, between you and your money advisor. None. Zero. But that's okay, because with today's technology, we're able to identify a company if the company has 3 or 4 what we call institutions like JP Morgan, Goldman Sachs, T. Rowe Price. If they control the stock of Walmart, all we want to know is, are they buying more of that stock? We don't have to know anything about the fundamentals of Walmart. We don't have to know their gross profit. We don't have to know their operating margin. We don't know any of that. All we have to know is JP Morgan, Goldman Sachs, and T. Rowe Price, are they buying more of Walmart? How do you know? It's a simple W, believe it or not, a W formation. See this W right here? Right-hand side, higher than the left. That means money is coming in. They're buying more of those shares. It looks like this on a line chart. This simple. That's a W formation. That means we got buying power. That means pricing power is coming in. Now, the best thing when you buy a stock is to have relative strength. The market's going down, it's pulling back 100, 200 points, but your stock is not pulling back. That's what it looks like right here. You never buy a stock unless this indicator right here, see this red dotted line and a white dotted line, a red line, a white dotted line, until it's above this red line called 32%. It means a stock must have momentum of at least 32% before you get serious and buy more than 25 shares. You only buy 25 shares until this red and white dotted line reach 32%. Once it reaches 32%, you have this W formation here. That means you're going to get pricing power. And pricing power looks like this. Real simple. Again, we don't care about the price of the stock. Get rid of that, because you make a big mistake. Everybody says, I better get it at 49 before it goes to 50. I better get it at 50 before it goes to 51. Big mistake. Get rid of the... We never buy based on what a stock is priced. We only buy on, is there a W formation? Right here. See this W? See this W formation right here? Yeah, that W formation. See it? That W formation is telling you what? You got pricing power. And that means the stock, as long as you're above this 32%, and as long as the red line's above white dotted line, you buy it. It gives you probability, high probability. All you're looking for is high probability. And the highest probability of success is a W. You see the W right here. We don't care about the pricing. I'll put it back up. And again, all the W is consolidation. Once you get those together, then you're going to have a very successful investment. That's all it is. That's simple. So why don't you join the gang, and I'll help you, and I'll teach you how to use a chart. Now, if you don't have time, we have another chart that really is neat. If you're very busy, all you do is this. When it turns green, like you see right here, from red to green, you buy. When it turns red, you sell. This chart follows the institution money. When they're putting money in, it turns green. When they take their money out, it turns red. That means you can short. Give you a good example. Here you were green, and then she turned red, and you could have made money all the way down. She turned green, you would have bought it. When she turned red, you made money all the way down. All you have to know is green and red. You don't have to know anything else. Nothing about a W, nothing about stochastics, nothing. So that is the easiest way to invest in stocks, and this really works. If you're busy, you don't have much time to learn, then this is beautiful. But either way, take a lesson. Join my gang. Try it for a month. I think I have the best teaching format in the country. And again, remember, it's not about buying it before it gets to 50 or before it gets to 51. It's all about pattern. It's all about pattern. You want that W formation. That tells you institutions are purchasing, they are adding to their position, and that means that they're going to have pricing power. And as long as this guy's going up and it's above 32% and you're above this white dotted line, you got such high probability of success. It's incredible. It's so easy. Join my gang, Phil's gang. Hope you enjoyed this. I'll see you on the charts.